Welcome to Accounting for SS1 at LightTech Academy. Today we study source documents, invoices, receipts, vouchers. What are source documents? Source documents are the original written evidence of business transactions. They provide the primary proof that a transaction has taken place. Before any transaction is entered into the books of account, there must be a source document to support it. Source documents answer the questions: what happened? When? How much? Who was involved? Importance of source documents. 1. They provide evidence of a transaction, important for audit trails. 2. They ensure accuracy in the accounting records. 3. They help prevent fraud. Fake transactions are harder to create without documents. 4. They are required by law for tax purposes, first in Nigeria. 5. They resolve disputes between buyer and seller. Types of source documents. 1. Invoice, sales invoice/purchase invoice. An invoice is a document sent by a seller to a buyer listing the goods or services supplied, their quantities, unit prices, and the total amount due. Who issues it? The seller, supplier. For the seller, it is a sales invoice, recorded in the sales daybook. For the buyer, it is a purchase invoice, recorded in the purchases daybook. Contents of an invoice: name and address of seller and buyer. Invoice number and date. Description of goods/services. Quantity and unit price. Subtotal, VAT, a value-added tax at 7.5% in Nigeria, and total amount due. Terms of payment, e.g. net 30 days. 2. Credit note. A credit note is issued by the seller to the buyer when goods are returned because they were faulty, wrong, or overbilled. It reduces the amount owed by the buyer. Effect: reduces the buyer's debt. Reduces the seller's revenue. Recorded in Sales Returns Daybook for the seller/Purchases Returns Daybook for the buyer. Color convention, usually printed in red to distinguish it from an invoice. 3. Debit note. A debit note is issued by the buyer to the seller when the buyer wants to formally claim a reduction for returned goods or overcharges. It increases the amount the seller owes the buyer. Alternatively, a debit note may be issued by the seller if the original invoice UNDRCHARGED the buyer. 4. Receipt. A receipt is a document issued by the payee, like the one receiving money, to the payer, the one paying, as proof that cash or check payment has been made. For the payer, it is evidence of payment, helps with cash records. For the payee, the carbon copy, duplicate, is kept as a record. Recorded in the cash book. 5. Check. A check is a written instruction by the account holder or drawer to their bank drawee to pay a specified amount to a named person or organization. Pay. Parts of a check: drawer, account holder. Drawee, bank, e.g. First Bank, GT Bank, Access Bank. Payee, person to receive money. Amount in words and figures. Date. Signature. Recorded in the cash book, bank column. 6. Payment voucher. A payment voucher, also called a cash voucher, is an internal document authorizing and recording a cash payment made by the business. It is signed by an authorized officer before payment is made. Importance: ensures that all cash payments are authorized and recorded. 7. Petty cash voucher. A petty cash voucher is used to record small cash payments for minor expenses, e.g. buying stamps, paying for tea. The petty cashier uses these vouchers to account for petty cash spent. Recorded in the petty cash book. 8. Statement of account. A statement of account is a summary sent by a supplier to a customer at the end of a period, usually monthly, showing all transactions between them, invoices, credit notes, payments received, and the balance outstanding. 9. Delivery note, waybill. A delivery note accompanies goods when they are delivered. The buyer signs it to confirm receipt of goods. It does not show prices, it just confirms delivery. Flow of source documents. Seller sends invoice, buyer checks against delivery note, buyer enters purchase in purchases day book if goods returned, seller issues credit note, buyer pays by check or cash, seller issues receipt end of month, seller sends statement of account. Remember, source document equals original written evidence of business transactions equals primary proof that transaction has taken place equals answers what plus when plus how much plus who. Importance, evidence of transaction / audit trail, accuracy in records, prevent fraud, required by law / FIRS, resolve disputes. Invoice equals document sent by seller to buyer equals list goods plus quantities plus unit prices plus total amount due equals for seller equals sales invoice equals recorded in sales day book equals for buyer equals purchase invoice equals recorded in purchases day book. Contents equals name plus address of seller plus buyer plus invoice number plus date plus description plus quantity plus unit price plus subtotal plus VAT / 7.5% Nigeria plus total plus terms of payment. Credit note equals issued by seller to buyer when goods returned equals reduces amount owed by buyer equals recorded in sales returns day book / seller plus purchases returns day book / buyer equals usually printed in red. Debit note equals issued by buyer to seller equals formal claim for reduction for returned goods or overcharges. Receipt equals issued by pay to payer equals proof that cash or check payment has been made equals recorded in cash book. Check equals written instruction by account holder / draw to bank / drawee to pay specified amount to pay equals parts equals draw plus drawee / bank plus pay plus amount in words plus figures plus date plus signature equals recorded in cash book / bank column. Payment voucher equals internal document authorizing plus recording cash payment equals signed by authorized officer before payment. Petty cash voucher equals record small cash payments for minor expenses equals recorded in petty cash book. Statement of account equals summary sent by supplier to customer at end of period equals shows all transactions plus balance outstanding. Delivery note / waybill equals accompanies goods when delivered equals buyer signs to confirm receipt equals does not show prices. Flow, seller sends invoice, buyer checks against delivery NOT enters in purchases day BOK if goods returned / seller issues credit NOT buyer pays by check or CSH seller issues receipt end of month / seller sends statement of account. Thank you and keep excelling at LightTech Academy, powered by LightTech Solutions Limited.